Sean Oliver, Senior Sales Associate at Lightspeed, and I have best-selling trading author Jia Zhu, who has over 15 years of active participation in the U.S. equities, options, and futures markets. He also has been voted Forbes Best of the Web for 4 consecutive years. He works with Alpha 7 Proprietary Trading Academy, which offers one of the most intensive and well-renowned educational programs available for intraday stock trading. You can learn more about them by going to www.alpha7trading.com. Please keep in mind that this presentation is for informational purposes only. Nothing presented today should be construed as investment advice or a recommendation to buy, sell, or hold any specific securities. Since we don't know everyone's investment objectives or risk tolerance, we are not endorsing any specific trading strategies. We also encourage you to ask questions as we go along through the presentation, and you can do that by typing them into the webinar chat box as we go along. We will answer them at the end of the presentation. This presentation will be recorded and uploaded onto our online webinar library. You'll be able to see this as well as most of our past webinars online at lightspeed.com/webinar. So if at any point during the presentation you miss something or want to go back and reference it at a future date, you can always go to our website where it will be archived. If you have any specific questions about what you're seeing, I definitely recommend you contacting Alpha 7 directly, or you can let me know. You can also, if you want any additional information, again, you can go to alpha7trading.com. Let me turn it over to Ya, and we can go forward.
All right, thanks, Sean. Thank you, everybody, for your patience. We're getting started right now. My name is J.U. I know there's 50 different spellings, but it is pronounced J.U. And today I want to go over...
I apologize for that. Sorry about that.
No worries, Sean. Today I want to go over scalping with the rifle charts on Lightspeed, on the Lightspeed platform. And this is sponsored by Lightspeed and Alpha 7 Trading Academy. So Sean did a pretty good intro as to who I am. I've been around for over 15 years, been around since the So's Bandit days and the Internet Mania and scalping, reading the tape, NASDAQ level 2, right on through the Internet Mania, the bubble, the decimalization, you know, basically the whole gamut. And as they say, the more things change, the more things change, the more they stay the same. What we see now these days, you hear about dark pools, the algorithm programs and the HFTs, but that is, the algorithms are a new element. The dark pools, well, that's all about access. And even back in the good old days, in the 90s, what the dark pools of today are the internet terminals of the old days, okay? Because that's what the markets are all about. The markets, any market, okay, is all about finding transparency. And as much as you hear the conjecture about, oh, we want a level playing field, you know, we want to know all the transparency, well, there's no such thing in a market. A true market doesn't want to show transparency. Okay? Otherwise, hey, it would just be static. There wouldn't be a market. And understand that with any market, you're going to have the dinosaurs, the bazookas, the tanks that actually move prices, and then everyone else follows suit underneath. Okay, and that's just the pecking order of the way things have always been. Now, how that has manifested back, you know, from the 90s to now, okay, that's a different story. And it's not evolution, okay? It's more of a mutation, mind you, because the core hasn't changed. And the core of any market, is to find that transparency before it becomes too transparent, okay, and react before it becomes too transparent. Because once transparency is full-blown, the window of opportunity to make money is gone. All right? That's what it's all about. It's all about transparency. And that also equates to liquidity. You often hear about liquidity in markets, and if the liquidity is there, it's good. If there's no liquidity, then instead of selling off now, because of these algos and HFT programs, we actually melt up. Okay, but that's a whole other animal, which I'll address in a little bit. Anyway, a little bit about me. Like I said, I've been around for over 15 years. My site, Underground Trader, been around over 15 years, and we were voted Forbes Best of the Web 4 consecutive years in a row. You see the books that I have written regarding my journey through the markets. The latest one is Way of the Trade. That was just released by Bloomberg and John Wiley, and that's a culmination of all the methods and everything put together. But notice the subtitle, Tactical Applications of the Underground Trading Methods. Okay, tactical applications, because as they say, the flaw lies in the execution, rarely in the game plan. So you can have a system, you can have methods, and they look good on paper, okay, and it's nice to see all the pretty charts and everything, but actually applying them is a whole other story. And that's what that's what triggered me to write Way of the Trade, because it's the application. The applications where people tend to get lost in addition to the fact that now you have so much more algorithm, basically the machines have taken over the markets, right? And as far as these HFT, high-frequency trading programs, there are opportunities to exploit these programs. And I'm going to kind of go over that a little bit in this webinar. So the proverbial iceberg, the analogy of an iceberg, okay, really applies when it comes to trading. And it applies when it comes to the markets on so many levels. Too many traders focus on, well, they focus on the tip of the iceberg. Yeah, trading you can make your money in a matter of minutes. Okay, they don't understand that in order to be consistent, to make your money day in, day out, to avoid the landmines and the traps, okay, it takes building the foundation underneath. And an iceberg only shows 10% of itself above the water, okay, the shallow portion. When I say shallow, well, that's transparent, that's visible, okay, and this is what everyone focuses on. Oh, look at the pretty iceberg, unaware what lurks beneath. And in order for this to pop its head, okay, a foundation, a base has to be formed first and foremost. And for a trader to reach that break-even line and to manifest consistency throughout the year as a trader, okay, it takes building that foundation. It takes training, okay, it takes guidance. And this is what you want to focus on. You know how they say, don't focus on the money, focus on the trade, okay? Well, that does lend to this analogy, right? You have to focus on the structure of not only building your foundation as a trader, okay, but even, like I said, this applies on so many levels. When you hear some type of news item come out, all right, news comes out, the first thing people normally think of is, oh, wow, that's good for the stock, and they may jump right in. What they don't realize is that's already been baked into the stock. What you have to be focusing on is not what you think, whether the news is good or bad, but you have to think in terms of how is everyone else going to think? How's everyone else going to react to the news? In other words, you're trying to gain the reaction. And when you start to think in those terms, then you understand something. This is literal. This is conventional, and this is transparent. Okay? The money's made when you think linearly, when you know or you are aware of what lurks beneath, when you're aware of the history And so what you see on CNBC, on these networks and the news that comes out and blah, 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 that's just the surface. That's meant to be put out there. Okay? Everything has been built up prior to that. Just being aware of what lurks beneath, okay, puts you ahead of a good majority of the traders out there. So I touched upon evolution. Evolution is growth. Okay? Evolution is improvement. The markets, yeah, you know what? They've gotten more computerized. They got the decimalization. Supposedly they're more efficient. All right, that's not evolution. All that is you take a core and you just paint a different facade on it. That's mutation. Evolution is something that's in the hands of its own of the market's participants. Okay, so as a trader, we've broken it down into 4 stages of evolution for a trader. There's the acclimation stage, and in this stage you're just learning the basic building blocks, the mechanics, and the structure. You familiarize yourself with the synergies and the processes. You observe the cause and effect, and you gradually build your comfort level. All right? The conditioning stage is where you apply knowledge of the methods for the best effectiveness. It's basically you dip your toes and you find out firsthand what works, what doesn't work. And you start to gradually build your template of situations, of setups, of what works in what context, what conditions, okay? And eventually you get a feel and you start to build your intuition. I'm not going to say instinct. Instinct is different. Intuition is what comes with time. And as you get more effective, that's when you get into the seasoning stage. And at this stage, you're able to apply fluently. You have an innate awareness, intuitive foresight, tempered with razor-sharp reaction, seamless skill set integration, and your comfort levels continue to grow. And the specialization stage, the final stage, and that's where you are basically laser beam precision fine-tuned, directed at specific concentration of strategies, styles, instruments, stocks, and complete immersion and fluency of behavior, nuances, anomalies, specifically to those, your whatever you're focused on. Okay, it's the highest level. This is what specialists do. All right, specialists only handle one stock, 1 or 2 stocks. All right, market makers only handle a handful of stocks. So individually, as a trader, these are the 4 stages of evolution. And you're not going to find this anywhere else. Okay, this is what I've learned firsthand. All right, in addition to guiding over 10,000 traders worldwide, I've seen where people fall off. Okay, the acclimation stage, they'll start off here slow. All right, they get a couple trades in, and the next thing you know, man, they're just, put the cart in front of the horse and kaplop. It has to be nurtured, and it has to be gradual, and it has to be guided. So evolution requires nurturing. Okay, someone with the foresight to prepare the template, the context, everything for you. Right, and that's what's going to speed up the learning curve. And then the repetition and the routine. Now today, I'm just going to go over, this is something you could take with you right off the bat, but understand something. Okay, rifle charts and pups, mini pups, you can look that up, on the internet, and you can try to figure out, how to play it. And that's all fine and dandy, but understand what I'm talking about when I say what lurks beneath and building up, galvanizing the foundation underneath the surface. Okay, you have to put together the building blocks. Everything has to be, the preparation has to be there, so that the beginning is the hardest part. Okay, most people tend to skip that part, and that's where the problem lies, because the market's going to exploit any gaps when it comes to your training, any gaps when it comes to your experience. It's going to try to exploit it, twist it, and turn you out like a pretzel. All right, so understand that these are components that I'm going to go over today, and you can use them. Okay. However, understand that in order to fully get the full immersion and get that cumulative effect, okay, the full training is what is required, what I feel is required. All right, so anyway, the trade sequence is broken down into 3 parts. The pre-trade, as they say, plan your trade, trade your plan, right? Well, pre-trade, premises, pattern, setup, information on the support resistance levels, okay, and the context of the markets. In trade, that's when you make your entry, you're monitoring, you're managing your trade, risk and probability are being managed, okay, all the way from entry to exit. And then post-trade, that's when you continue to monitor and you review your performance and your analysis. And this helps to galvanize your own template. Now, one of our basic tools is what we call the rifle chart. And this chart has taken me years to develop. Well, actually, you know, basically every year I kind of tweak it a little bit, tweak it a little bit. But they're very common basic components as far as the indicators are concerned. Right? We have our simple moving averages and Bollinger Bands up top, Bollinger Bands, simple moving averages, okay, and then we have our stochastics. Now, taking each of these components alone, you can always argue that, well, moving averages, they're the laggard. I want something that's going to, you know, give me a foreshadowing effect, something that's going to, you know, tell the, you know, give me, predict the future. Okay. Bollinger Bands. Okay. Well, the argument is, well, you know, what about the range? You know, that's all laggard. Blah blah. Stochastics. Oh, you know, don't even get me started on that. There's no consistency there. You know, this 20 to 80 band, whatever oscillation. It was great this morning, but in the afternoon, it made a full oscillation and then collapsed. All right, so take each part individually, and you can always find arguments against it. You can always find your skeptics and your critics. Once again, tip of the iceberg, shallow. People taking shallow understanding, shallow definitions of how to use these components, and that's fine. That's great. That's better for us. What I've discovered through the years is when you take these and you put them together on one chart, you can create a cumulative effect. All right, and there are certain patterns that I've discovered through the years, okay, that fall under the law of linearity. In other words, if a price pattern is effective on a smaller time frame, it should be just as effective on a wider time frame. All right. So what's the difference? Well, the difference is naturally the range, the price range, okay, and the time for it to trigger. So therein lies one piece of the puzzle. If you have something that is effective on a shorter time frame, it's going to be just as effective on a longer time frame. Okay? And understand that. As much as people, in all reality, they want a holy grail, okay, they want to find an indicator that's going to predict something. Okay, let me also interject another word for you. All right? Foreshadowing. Foreshadowing. So if something, a pattern, you know, whatever, you know, a cup and handle, a ascending triangle, a wedge, whatever, what I call, you know, a mini pup, if that's consistent on a 1 minute time frame, it should be just as consistent on a 15-minute time frame or a 60-minute time frame, right? That's the law of linearity. And therefore, ultimately, if the 15 or the 60-minute has a mini pup, which is a bullish breakout pattern, okay, wouldn't that be foreshadowing like a Doppler effect on the shorter time frames? And this is where you get to the time frame convergence, because there are 7 time frames that I work with, okay? And each of these time frames, as they get longer and longer in the time frames, these form more of a predictive, more of a foreshadowing, a forecasting function. Even if a stock is selling off now, on a wider time frame, it may just simply be a pullback to a support area where it will deflect, coil, and then break out. Okay? So it's like watching the weather. And even if it's sunny outside, the weatherman says, hey, there is a nasty thunderstorm. Hey, there is a tornado that's 60 miles away. Would you believe him? Is he predicting? No, he's forecasting. He's foreshadowing, okay, what is going to happen. So I want you to remember that, because that is a cornerstone, okay, of the methods. So as far as the rifle chart setup, you can set it right up on Lightspeed, 5-period simple moving average, 15-period simple moving average, 50-period, 200-period. Okay, those are your moving averages. This is your roadmap. Your stochastics, 15.35, and your Bollinger Bands. Okay, the Bollinger Bands and the moving averages will be in the price chart, and the stochastics, which is your engine, okay, is going to be on the lower portion of the graph. Okay, so when we take a look at something like Netflix, these are your upper and lower Bollinger Bands, right? The 15-period moving averages are the yellow and the green. Okay, and then you have the middle Bollinger Band, actually, which is this yellow. All right, and then you have your stochastics beneath. And this is what I call the rifle charts. Now, when you look at these, okay, right off the bat, it may seem a little cryptic. Okay, but once you understand something, these stochastics, okay, they're composed of two oscillators, a lead oscillator, which is the green, and then a yellow oscillator, which is the laggard. The rudimentary use of stochastics, okay, is to be used as a momentum indicator, or an indicator that's going to indicate when something's overbought or oversold. Okay, so above the 80 band is overbought territory, below the 20 band is oversold. So the rule is if it slips under the 20 band and crosses back up through the 20 band, it's a buy signal. If it pops up through the 80 band and slips down through the 80 band, that's a sell signal or a short signal. Okay, to a point, that is true, and that is correct, but that's just the tip of the iceberg. When you utilize the moving averages in addition to the stochastics, utilize a 5-period moving average at the very least, okay, that's where we come up with mini pups, where the 5-period moving average will act once it starts to deflect pullbacks, and the stochastics, instead of crossing back down, stall and coil back up. That's what's known as a mini pup. And you can immediately target those upper Bollinger Bands for that time frame, or the lower Bollinger Bands on a mini inverse pup. Okay, and these are just nominal gains. Now, I'm going to show you an example of that with Netflix. Okay, so let's take a look at this video. Now, right here, right off the bat, okay, this is what we have. This is our 5-minute rifle chart. I'm sorry, 5-minute rifle chart, 1-minute rifle chart. Okay, I'm only using 2 time frames, 5 and the 1. The 1 is going to, it's kind of like your scalpel. Okay, it's going to get you in quicker. All right, it's going to give you the earliest indication. The 5-minute smooths out, so that's more of your trend chart. And all we're looking for, okay, is where the buyers are going to make some type of a stand, or the sellers are going to make, shorts are going to make some type of a stand. Now, what we have here is our yellow line right here, which is the 5-period moving average. We got the dip through the 20 band. We got the bounce up through the 20 band, okay, and then it pulls back, stalls, and instead of crossing down, it actually slopes back up. Slope is very important. 5-period moving average starts to slope back up. Okay, so right off the bat, that tells me, wait a minute, this thing is starting to form what's known as a 5-minute mini pup. And the 5-period moving average is sloping back up. So this is setting up a potential long. Now, we watch level 2, okay, And for those of you who've ever played Netflix, you know that it can be pretty choppy. But now we notice the 5-period moving average, that's starting to hold its ground. So we go ahead, we take 200 shares. Now we look at the 1-minute chart, all right, excuse me, just look at the price chart alone. We know that 340, okay, has been a bit of a resistance here, all right? And that applies to any round number, you know, in 5s and 10s. 340 is going to be a tough break, all right? But you'll notice that the 1-minute stochastics is crossed up, it's stalled, and what it's trying to do is form what's known as a mini pup through the 80 band. I look at the 5-minute. If that 5-minute stochastics was down, I'd be real weary about taking longs on a 1-minute high band mini pup. But 5-minute has a mini pup. Okay, so we go ahead and we scale into the position. So long 500 shares total. Okay, at 339.86 average. And once again, we want to know what's lurking beneath. The 1-minute chart, okay, is forming what's known as a mini pup at the 80 band. However, if that 5-minute stochastics was right here like this coming down, okay, I'd be real careful of the 1-minute peaking coming down and then basically falling right in line with the stochastics move down. But what we have here is a 5-minute mini pup. Now notice how fast this thing moves on that 340 break. This is what we call a dual mini pup. I have the 1-minute, okay, I have the 5-minute mini pup. Now look back and see where every time it failed near that 340 area, guys, okay, every time it failed near that 340 area, it did not have the support or the convergence with the 5-minute stochastics. But this time we have a 5-minute 5-period sloping up, we have the 5-minute mini pup, and we have the 1-minute mini pup. Okay, this is the difference between these head fakes, okay, and this breakout, because that 5-minute forming that mini pup gives me that extra added layer of protection, gives me that extra added layer of momentum, and the nice part is I've got room. Okay, I've got room. Usually, when you get a mini pup, that's market tested. All right, it's like those Hanes commercials. Inspector 9 or whatever, okay? So those upper Bollinger Bands is a nominal upside, okay? So Netflix is starting to squeeze. You got the 1-minute mini pup, right? And as you know, Netflix can be very choppy and the spreads can get very wide. So it's good that you place those orders ahead of time into that liquidity. There's a thing that's known as stinky fives area. 40, 50, 60, all right, 339, 40, 50, 60, 335, 40, 50, 60, 334, 40, 50, 60. In other words, go counting fives, all right, counting fives, all right, and then add 50 cents to that number, subtract 50 cents, then so you get your, from 340 you get what, 350, 340, 50, and then 339, 50, and then add in 10 cents on both sides for slippage. So the stinky fives level is going to be 339, 50, add 10 cents on both sides, so 339, 40, 50, 60, 340, 50, add 10 cents both sides, 340, 40, 50, 60. Okay, that's what's known as stinky fives. So you always want to respect those stinky fives. Okay, so you want to place those orders ahead of time. So as you can see, all right, we got some fills ahead of that into the spikes. Okay, and the 1-minute is forming that mini pup, and it's still in that mini pup formation. The 5-minute still in a mini pup formation. All right. The 5-period moving average, 339.74. That's going to be our support area. Okay, but as long as the 1-minute's in a mini pup, okay, this thing is still uptrending, and the 5-minute is in a mini pup. So basically, all you do at this point is you just have to pretty much pick your exits. Okay. And liquidity overrides price. And you want to be selling into the liquidity spikes. Okay, so our limit orders are getting filled to the upside, 340.75. Got 100 shares left. And at this point, what we don't want to do, we don't want to sit around for the stochastics to peak out and slip. Okay? But once again, our 5-minute is forming that mini pup. and it's continuing to squeeze to the upside. Now the nominal pullback is going to be the 5-minute 5-period moving average, 339.80. Okay, so 1 point pullback, that's nominal. But realistically, if you're playing the stock as opposed to the option, okay, you want to be catching the move to the upside, and you want to be selling into that liquidity. So we have a 1-minute mini pup that's still continuing to grind. Okay, and we have the 5-minute that's still forming that mini pup, and we're selling right into that liquidity, and the last 100 shares are out. Okay, for a 352 profit. Now, once again, okay, the 340 break triggered that squeeze, and you can use all kinds of indicators. You can say, hey, this is a 1-minute cup and handle. That's fine. Okay, the lip broke, busted the lip at 340. All right. When it comes to methods, okay, the more indicators or the more methods that converge, the better, naturally. All right, but on something like this, it was the 5-minute mini pup backed by the 1-minute mini pup trigger that triggered this particular trade. Okay, and so the question you got to ask yourself is, well, you know, Jay, what is the difference between why did it squeeze that time? Okay, when it failed once, twice, 3 times prior to that. All right, trend line people can always connect the trend lines. Okay, and once again, there's nothing wrong with that. Okay, you don't have to just use one method, and that's all about building that base. Okay, that's about building that foundation. What lurks beneath the iceberg. All right. So something like this, like I said, you got the 5-minute mini pup and the 1-minute mini pup. Very convenient. Okay, very convenient. And as far as managing the rest of it, all right, yeah, maybe you may have trimmed it down, and you were still riding 100 shares. No problem there, because as long as the 1 minute's still rising, the 5 minute's still rising. All right, the mini pup already gives you an idea. All right, well, if I'm going to ride it up, I have to be able to swallow a pullback to that 5-period moving average. Now, notice how we got the 5-minute 5 to update. Every time you get a candle update, you're going to get the moving average update, and then you're going to get the Bollinger Bands updates just as well. Something like Netflix, it's a feather trigger. So by the time you realize, oh, wait a minute, the upper Bollinger Band that just hit, that thing is going to pull back really fast. That's why you really have to think ahead and place those orders ahead of time. Okay. So anyway, just to speed things up here. All right. So this was the 5 and 1 minute dual mini pup breakout trade. All right. For a nice score on Netflix. Now, if you're playing the options, okay, naturally you want to watch the deltas, and if you're playing for a delta move, okay, then you're going to utilize some of the wider time frames, but you're still going to utilize the shorter time frames as well as far as your entries and your exits are concerned. So that's just one component. Okay, that is what the 5 and the 1 minute look like when you utilize them together. Okay, there are 7 different time frames that I use. The 1, 5, 15, 60 minute, okay, daily, weekly, and monthly. So those are the 7 time frames. That's what I've determined. And trust me guys, I've used all the time frames. And those are the most synergistic, okay, and those are the ones that really work. Those are the ones that stick. So it's those 7 time frames. That doesn't mean you have to stare at 7 time frames on every single chart. Okay? Whenever the stock gets within a vicinity of a wider time frame bumper, which is any one of the moving averages or the Bollinger Bands, then you want to pay attention. If not, don't sweat it. The 1, 5, 15 are going to be the main tools that you're going to be utilizing intraday. Okay? So that gives you a depth of perspective so that you're not just focusing on a 1 minute. And once again, if the 1 minute is all we took, but 5-minute stochastics were in this moment, in this period where they were coming down, we would have gotten slammed. It's the fact that the 5-minute finally coiled, built itself up, got the bidders, and formed a mini pup in addition to the 1 minute as a trigger is what triggered the actual breakout. It failed 1, 2, 3 times prior to the break, okay, prior to the break attempt, and then finally broke this time. So you got to ask yourself, what's the difference between breaking out here as opposed to failing here, here, and here? Now, in hindsight, it's always easy to look back and be like, oh, yeah, well, you had higher highs, right? This looks like a cup and handle. Okay, oh, that makes sense. But let's be honest here, okay? If you tried to take the breakouts on each one of these and you failed, okay, how likely would you have taken a breakout here? Unless you understood that, hey, this time's different. Why is it different this time? Because the rifle charts are showing me the 5 minute this time has a mini inverse pup. What lurks beneath. You've got to be aware of what lurks beneath so that you're taking advantage of the transparency when that transparency breaks water or breaks ground, okay, and emerges above water. The shallow, literal transparency. And you know what? You want to be selling into that. And that's the mentality. That's the thinking that you got to have, mentality. And this comes from being guided, being shown the right templates, okay, being guided through your evolutionary process, and ultimately, and it's all in the ball's always in your court, okay, how much you put into something like this. But ultimately, you want to get to the point where you hit the seasoning, okay, where you can call yourself a seasoned trader, okay, because you've made your mistakes. You've made your mistakes and you've learned from them. Okay, you know what your impediments are, and you're able to. Whether I say there's 3 remedies, okay, for impediments. You can dilute them, you can counteract them, okay, or you can divert them. And when you're aware of that, of your impediments and what triggers your impediments, okay, and you actively implement any one of those 3 remedies, okay, that's when you know you're getting closer to the seasoning part, a seasoned trader. Just like a seasoned fighter, a seasoned boxer, a seasoned football player, a seasoned quarterback. Okay, they've been around the block, but they've also learned, okay, from the pain. They've learned and they've recalibrated and adjusted their templates moving forward. And these are the 4 critical elements for seasoning. Okay, your rituals. They're not even just routines, they're rituals. You got to almost get religious about it. Every morning you have to do a preparation routine. But within that 30 to 45 minutes of preparation, that's going to make your day. Okay, that's going to make your day. Your templates, okay, trade sequence templates, behavioral pacing management, your money risk management templates, your comfort level templates, right? It's all templates. These are all keys to our behavior. Okay, so getting taught what a proper template is. Okay, because everyone needs a benchmark, everyone needs a measuring stick to be able, bottom line, to be able to measure up, number one, but also to improve. And then as far as the sequences, pattern sequences, price and pattern sequences, trade sequences, okay, and then the application. So that's just a portion of the training that's required for the traders of today in these markets, in these electronic, algorithm-driven, high-frequency infested thunder and tumbleweeds landscape. The season can't be rushed, but it has to be guided. Okay, the proper training. And all this is, once again, it all boils down to, the training. Okay, and Alpha 7 Trading Academy, okay, has the exclusive trader training program. I've helped to create this trader training program. Video course alone contains over 30 hours, over 700 slides, live action videos, meticulously designed and structured, okay, in a lateral, progressive, and depth-engaging approach to organically cultivate your evolution towards becoming a seasoned trader. And this isn't just for newbies. This is for some of you old-timers just as well, who may have been stuck in a rut, and you're remembering the old glory days, and you're still trading like the old glory days, and that doesn't work anymore. Okay? This program is what's going to clear up that clogged drain so that you can get the circulation flowing again, that enlightenment, the growth. Okay? And that is evolution. So, Alpha 7 Training Academy, you have the contact information here. We have a free sample lesson for you guys. All you got to do is email info@alpha7trading.com and request a sample lesson, and we'll get that out to you in 24 hours. This is where you're going to get your full comprehensive training to adapt to these markets. Thank you, everyone. If there's any questions, I'll go ahead and take them now. Sean? Hello?
Yes. One question that came through is, this webinar will be recorded, and it's going to be on our website. Another question was definitely direct contact information, which is now up on your screen. So if you have any questions and you want to contact Jay or Alpha 7 directly, you definitely want to take that opportunity and take them up on their free sample lesson and see if it's something that would interest you and something you can definitely learn from and grow from going forward.
All right.
Thank you, Jay, for a great presentation. And again, guys, if you have any questions, don't hesitate to reach out to Alpha 7 directly or contact Lightspeed with any questions that you have, and we both would be happy to help you.
Thank you.
Again, everyone have a great night.
Good night.
All right, thank you, Jay, and everyone have a great night.
Take care. Bye-bye.